Welcome to the Dividend Dynamos channel. Today, we're diving into the world of income investing with a focus on the NEOS S&P 500 High Income ETF, SPYI. If you're looking for a tax-efficient way to generate monthly income while still capturing some upside potential, you're in the right place. In this video, we'll explore the key features of SPYI, its investment strategy, and why it might be a great addition to your portfolio. So, sit back, relax, and let's get started on this exciting journey to financial growth. Before we dive in, please note that I am not a financial advisor or certified financial planner. This video is for informational and entertainment purposes only. It's important to do your own research and consult with a qualified financial advisor before making any investment decisions. Your financial situation is unique, and professional advice can help you make the best choices for your specific needs. Now let's get started. NEOS Investments left its mark on the ETF industry in 2024, as they have now brought 9 specialized ETFs to the market. The NEOS S&P 500 High Income ETF, SPYI, has become one of my favorite income investments, and it looks like many other income investors agree. Since September of 2023, SPYI's assets under management have increased from $314.37 million to $2.64 billion. If SPYI wasn't delivering on its investment objectives, its assets under management wouldn't have increased by over $2.33 billion, or 740%, in the past 15 months. SPYI offers investors a more tax-efficient way to benefit from option overlay ETFs while establishing a strong track record of generating large amounts of monthly income. JP Morgan Asset Management is leading the way with their JP Morgan Equity Premium Income ETF JEPI, as it's amassed over $37 billion in AUM. But when I look at the results, SPYI has generated more income and capital appreciation in 2024. It looks like we're heading into a macroeconomic environment that sets up well for the S&P 500, especially the largest companies in the market, and that we will see margin expansion lead to earnings expansion and higher stock prices here in 2025. SPYI is positioned to continue following the market higher without capping all the upside potential while generating double-digit yields for investors. That's why I'm bullish on SPYI and plan on adding more to my position. Shares of SPYI have increased by 0.76%, and when the distributions are included, the total return over this period is 3.84%, compared to the S&P 500, rising 4.14%. It's looking like the bull case for SPYI is very strong, and after looking at how the largest call option ETF fared in 2024, it looks like SPYI will continue to grow its assets under management and become more popular this year. While SPYI is an ETF with more than 500 positions, there are still some risk factors to consider. The first risk factor is opportunity cost, as SPYI utilizes a call option overlay strategy to generate income, which caps the upside potential to a degree. In 2024, the S&P 500 appreciated by 25.89%, while SPYI increased by 7.35%. A portion of the 18.54% delta has been paid in monthly distributions, but there is ultimately an upside that has been left on the table by investing in SPYI. If your focus is on capital appreciation, then SPYI may not be the best investment for you to focus on, as its primary investment goal is to provide immediate monthly income to its investors. There is no mechanism built in for downside protection, so there is equity risk that comes with SPYI, as negative fluctuations in the market could be hard to recover from compared to traditional index funds. There is also income risk, as the majority of the income generated is from its covered call overlay strategy, and premiums in the option market fluctuate. While the distributions have been similar, there is no guarantee that they will remain this steady. Just because SPYI has a space in my income-producing portfolio doesn't mean it's a good fit for anyone else, so investors should do their own due diligence before allocating capital toward SPYI. While JEPI continued to grow last year, it may have been upstaged by SPYI. The idea behind these different call option overlay products is to generate larger-than-average amounts of income while still trying to produce capital appreciation. JEPI paid $4.25 in distributions throughout 2024, but its distribution amounts fluctuated significantly more than SPYI's distributions. JEPI paid an average monthly distribution of 35 cents per share and has a yield on cost of 7.71% based on its share price of $55.12 on January 2nd of 2024. SPYI, on the other hand, paid $6.12 in distributions throughout 2024 at an average monthly rate of 51 cents per share. Shares of SPYI had a yield on cost of 12.74%, based on its share price of $48.02 on January 2nd of 2024. SPYI generated an additional 5.03% of yield while appreciating by an additional 1.29% on a year-to-date basis. I am a shareholder of both JEPI and SPYI, but I haven't been adding to my JEPI position recently because I believe SPYI's investment methodology will produce better results in the future. Based on these statistics, it doesn't surprise me that SPYI has added more than $2.3 billion in assets under management over the past 15 months, as it has maintained a double-digit yield with minimal fluctuations, while delivering some upside appreciation. What makes SPYI very interesting to me is its approach to generating income in a tax-efficient manner. SPYI uses a data-driven call option strategy to generate a distributed monthly income to its investors. SPYI will write covered calls on its positions to generate premiums in the option market. Instead of paying out all the premiums and capping 100% of the forward upside potential, SPYI will utilize a portion of the premium generated to purchase out-of-the-money call options. This allows SPYI to produce capital appreciation if the market continues to climb higher instead of remaining flat, because the upside has been sold away for immediate premiums. I am a fan of the two-legged option overlay strategy because SPYI is still generating double-digit yields while allowing its investors to benefit from some of the upside. One of the reasons investors are flocking toward SPYI is that it's doing this in a tax-efficient way. SPYI is an actively managed fund that looks to take advantage of tax loss harvesting opportunities while using SPX index options for its option overlay strategy. These option contracts are classified as Section 1256 contracts and are subject to lower 60/40ths tax rates. In addition to generating double-digit yields, investors will also benefit from some reprieve at the end of the year when the 1099s from the brokerage houses come out. With the S&P 500 climbing over 25% in 2024 after delivering 24.23% of returns in 2023, it's hard to believe people are still waiting on the sidelines. There is more than $6.8 trillion in money market accounts, which has expanded throughout the year, and this doesn't include capital being allocated toward bonds and CDs. Waiting for a better entry point in risk-free assets hasn't been a good move, considering that even if the markets experience a 15% correction in the near future, they would still be up more than 30% over the past 2 years. The risk-free rate of return is continuing to decline, and it's hard to find any one-year CDs that are yielding more than 4.5%. The United States 12-month bill experienced its yield decline from 5.25% to 4.2% over the past year. At some point, the risk-free rate of return will not be enticing anymore, and I think that once there isn't a 4 handle on the yields being produced, we will see capital come back into the market. This isn't capital that has been concerned about capital appreciation, so I believe it will be allocated toward income-producing investments to try to recreate the yields they have become accustomed to. This scenario could be very bullish for SPYI, as it offers a tax-efficient way to generate income from investing in the market. The Fed members took another individual assessment, and the most likely scenario is that we end 2025 with rates at around 3.9%, and we end 2026 with rates around 3.5%. While this isn't as low as the assessment of last September, it's still bullish for the market as the cost of capital will continue to decline. This will allow companies with floating-rate debt to lower their interest expenses, and companies with higher fixed-rate debt to potentially refinance at better rates. This will also help the debt market become less restrictive and incentivize companies to borrow for expansion. We have also seen oil prices decline, and it's likely that we will see deregulation in the energy markets from President Trump as he has a goal of battling inflation by lowering oil prices. When the price of oil is lower, it also helps lower input costs for manufacturing, transportation costs, and fertilizer costs, which are bullish for the economy. President Trump has also discussed the potential to lower corporate taxes and provide further tax breaks for American citizens. If this occurs, we could be in one of the largest pro-growth economies we have seen in decades, and this would be bullish for the market as the largest companies in the world would benefit from increased goods and services being purchased. When I look at the top 10 holdings for SPYI, I get more bullish about this ETF. There is 37.90% of SPYI's assets under management allocated to the top 10 holdings, and these companies are expected to generate 40.25% earnings per share expansion over the next couple of years. I think that we could see margin expansion if the economy gets stronger and we experience lower oil prices and interest rates, which could help these companies expand their earnings at a larger rate. SPYI should be able to follow the market higher and potentially see the premiums generated from their call option strategy increase as these holdings appreciate in value. NEOS Investments has created some captivating ETFs, but SPYI has become one of the most interesting income-producing investments I have invested in. I believe SPYI has just about dethroned JEPI as it generated more income and appreciation than JEPI in 2024. SPYI's option overlay strategy allows investors to participate in some upside as part of the portfolio is uncapped, while generating monthly distributable income, which has exceeded a double-digit yield throughout last year. I believe the market is going higher this year, and if it does, SPYI will likely replicate its year-over-year performance. If you're interested in income-producing assets as the risk-free rate of return declines, SPYI is worth looking into as it has established a strong track record of generating large amounts of income that isn't dependent on the effective interest rate from the Fed, and I will continue dollar cost averaging into my SPYI position. Thank you for joining us on this deep dive into the NEOS S&P 500 High Income ETF SPYI. I hope you found this video informative and helpful. If you enjoyed the content, please give it a thumbs up, leave a comment, and subscribe to our channel for more investment insights. And don't forget to hit the notification bell so you never miss an update. Happy investing, and we'll see you in our next video.